All right, so good evening again to every one of you. This is our usual masterclass Saturday evening session, 5 p.m. and an eventful week. And let's quickly take a look at how things played out. So I'm looking at the weekly, daily, and the 125-minute time frame of the Nifty. I generally take a look at daily, weekly, daily 75 as a factor of 5. 125 generally at times when the market goes a little choppy, volatile, and I would prefer to take some trades from 125 also. So below daily, I prefer 125. I don't go below 125 personally. So keeping an eye on 125 nowadays closely. First things first, we have been talking about this breakout failure, which has led to this down move on the weekly time frame. We've been continuously talking about this slant momentum divergence, which has again now angled on the downside. We've got a structural divergence playing out on the top, and we have a one-way fall on the daily time frame. Now, most of the times when these kind of breakouts fail, and if they have to really fall, significant fall, they generally give a pullback, a shallow one, and then they open up on the downside. That's like a typical behavior of a breakout failure. Typical. But at times I've also noticed that a significant move happens, then the pullback comes. So Friday's trade is more like a pullback. These are the Heikin-Ashi charts, so you might see, oh, this is a red Heikin-Ashi. But if I turn this to a bar chart, then it's a pullback, it's a bounce back. So this is the first bounce back since the breakout failed. And there was a lot of drama in yesterday's trading session. So if I take the last two trading sessions, big range expansion, you can see the one-day range shooting outside the 2 standard deviation. A lot of drama happened and we have a pullback. Going back to the Heikin, first things first is this particular low of the Nifty. And this probably will apply to almost most of the sectors and stocks. That last Friday's low is the most important level for any kind of a breakdown, which anyways is very close to this low. So for some reason, for whatever reason, if Monday or by Monday or Tuesday, you find yourself that Friday's low has been broken, then expect some serious selling. If that happens, that will lead to some serious selling. Now let's talk about the positive side. What if this low is now established and the market is going to give a larger bounce back, pullback? For this, I need to take a look at the lower time frames. The lower time frames are reflecting a bit of an improvement in the trend and in the underlying momentum, a bit, just a bit. Nothing to be really excited about. I would say 22,300, the previous highs from which we had this sell-off. From 22,200 to 22,300, this particular zone is important. You would also see that close to this 22,300, you've got this low. So in the past, the chart has given us confirmation that the low has in the future acted as it did act as a high. And so 22,300 is an important level. I do not personally track highest open OI build-up strike prices and all that. But I will not be surprised to see a 22,300 build-up, significant build-up at the 22,300 level. Maximum call writings probably would have shifted by the look of the chart. I don't track it, so I might be completely off in these kind of observations or predictions. Maybe 22,500 would have seen some maximum build-up of call. Nevertheless, that doesn't add a lot of relevance to our theory, but till 22,300 is not being taken out with confidence and sustained. We would like to see some good quality large caps playing out. If that doesn't happen, this is not the market to go bullish. One. to we should be a little extra careful and cautious with the weekly chart. Remember, in the weekly chart, since this bottom, every time there has been a negative week on the Heiken Ashi, it had only lasted for 1 week. And that week's low was never breached. And you will notice a similar kind of a behavior if you mark this particular fall. You'll see that the sell-offs had been sharp. Every time the sell-offs have been sharp. And the bounce backs equally sharp. Now, will this be the third time? I have my doubts, because in the previous sell-offs, there was not much signs of a strong structural divergence, which I have this time. So need to be a little careful. View strategy on the market is bearish from the daily time frame. But wait for a little bit of a pullback, wait for RSI levels to go overbought, and then you might get some better levels, better risk reward to go short. Not the best of time to go long. I have the stock charts open in front of us with the RRG graphs. And the first thing that I would do is reduce this to 1 week. And we will try to understand the weekly change of price. And you can see IT continues to underperform. Now, I am a little bit disappointed with myself personally here, because I was foreseeing a bit of a bounce back from IT. The bounce back that it managed was just 2 days, especially Infosys. So I'm a little disappointed with myself. I was expecting a meaningful bounce back and I was looking to participate in that bounce back. On the other hand, it opened on the downside and I could not play this down move on the IT. Followed by healthcare. Predominantly, if you remember, it was Sun Pharma which spooked this move, but now the entire pack is showing signs of weakness. Mid cap, and where are your small caps? Small caps are also there. Nifty more or less 1.7% down. So mid cap has underperformed much more than the smaller caps. The oil and gas, the metal, and the consumer durables. And let's add media also. I'm not a big fan of the media, but nevertheless, these are the 4 sectors which are down less than 1%. Rest all were negative. So across the board, participation in the selling predominantly led by healthcare, IT, mid cap, and real estate. Now let's increase this 1 week to around 12 weeks. 12 weeks. And let's fit the RRG graphs. The leading quadrant to the weakening quadrant to the lagging quadrant, and then the improving quadrant. And now I'm going to sort it in terms of tail. I'm not interested in the percentage change here. I'm interested in the tail. And I would like to see where lies the relative strength. The relative strength lies in auto, healthcare, metal, and consumer durables. Let's take a look at auto. Still pretty strong. Healthcare. Okay, auto still pretty strong. Is the chart reflecting the same thing or not? Auto. The chart is giving me a bit of a sign of structural slowdown from the weekly time frame, a contra kind of a setup. The daily chart has moved into a short-term downtrend with momentum being on the downside, and we've got a pullback bar. You've got a sharp sell-off and a sharp bounce back. Yesterday, I got butchered in Maruti short trade, and it was one of those classic whipsaws that leaves a very bad memory, and Maruti's trade was one of those on the short side. I mean, auto is giving very early signs of a prospective structural slowdown. I'm not too sure whether it will lead to any opening up or not. So not very, very confident about the weakness. So we can avoid this. Healthcare, as you can see, is in the leading quadrant. It's losing relative strength. It's slowing down. Momentum is slowing down. Not a weak sector. The momentum is weakening. So if you take a look at the sectoral chart, you will see that it has moved into a downtrend. It has given us a pullback and open up on the downside. The weekly chart has also. So structurally negative. It is now dealing with its previous supports. So we probably might see a bounce back and then, if at all, further weakness. You can find it from the weekly chart. So healthcare also weak, but we will wait for any bounce back. Metals is showing strength, both relative strength and the momentum of relative strength is positive in the metals back. Let's quickly take a look at that sectoral chart. No sign of weakness on the weekly, nothing. And the daily also holding pretty decent. Momentum is slowing down, but trend is yet to reverse. So metal predominantly bullish, stretched. Don't go long here. Do not go short here either because signs of weakness is not there. Tata, this is consumer durables. Consumer durables is, in terms of RRG graphs, is just there, gaining relative strength and momentum. This should be a positive chart. This should be a bullish chart. Let's quickly take a look at the Nifty consumer durables. And yes, the weekly chart is definitely fine. It is giving a pullback reading on the weekly chart. The daily chart, however, has just gone through a corrective move with a downward momentum and downward trend. Not good enough, not strong enough, definitely to short. But yes, you can probably find some kind of a bounce back opportunity close to these levels. 33,200 kind of levels. If the weekly trend holds. So consumer durables not to be shorted, look for long opportunities. Fin, now I like the improving quadrant. Of these 4 quadrants, improving is my favorite quadrant where I get improvement of momentum, where I will be looking for improvement of relative strength. Now Fin, Bank Nifty falls there. This is a good sign for the market. This is not a bad sign because this is where lies the weightage. So Bank Nifty, sharp sell-off, weekly very good looking, daily oversold, 125 bouncing back. HDFC Bank and the others did really well to surprise on the upside. CNX Finance will also give you a similar kind of a feeling. So if yesterday's bounce back is going to extend Monday, Tuesday, Wednesday next week, our sectoral analysis is telling us that move can come from the Bank Nifty, the CNX Finance. The consumer durables will probably hold well. The metals, not really, it is kind of stretched. So these are the names that's coming up as of now. Now, those which were strong and now losing momentum: oil and gas, realty, small cap and mid cap. This is not good news for the broader markets, but oil and gas and realty. Let's quickly take a look at the energy index, CNX Energy. Now here you will notice that yes, it has moved into a short-term downtrend, downward momentum. The slant divergence on the weekly is very, very relevant. So any kind of a pullback from here on can be an opportunity on the downside. So keep an eye on Reliance, keep an eye on the OMCs, keep an eye on NTPC, ONGC. We might get a bit of a slowdown here in the oil and gas and then real estate. In the realty chart, the reality is structurally giving us more signs of weakness than oil and gas or energy. The weekly chart is offering us a breakout failure. So this is the breakout, this is the failure, this is the pullback, and this is the extension. Right? So look for shorting opportunities from the CNX reality. And finally, those which continues to lag: media, FMCG, and sadly IT. IT matters the most to the market. This is the index, this is the pack, this is the sector which enjoys the second most highest weightage after the banks and financials. Now 33K for the CNX IT on the weekly chart is where you had the highs of September 23. There's been no slowdown of selling momentum. The daily chart as well as the weekly chart does not give me any signs. Okay, the selling seems to have exhausted. The last time I got a meaningful signs was this area. And as I said some time back, there was just a 2-day bounce back. That's it. I was expecting a little bit more than that. I was expecting that this lows will hold and probably will get a bounce back and Nifty will find some support. Sadly, that did not happen. went wrong here in my expectation. And so I could not play in this down leg. These down legs I have managed. In fact, if you see our sheet, you will find a short trade in this area in Infosys, but could not play this short leg. But IT, stay away. The first thing I would like to see is slowdown of selling. Media, I'm not a big fan of media, so I don't think I don't even have media in my... Do I have media here? I don't think so. And the last one was FMCG. Now, this is where ITC, Hindustan Unilever may play a role. Nothing happening on the weekly chart. Nothing. We don't have anything to be excited about. Yes, it's relatively down. Yes, it has corrected significant, right? The correction from a high to low basis is around close to 10% now. In 15 weeks, a 10% correction is a decent correction for any sectoral index. What I don't like in the FMCG pack is this area. Choppy, volatile. It's not trending down. It has been completely choppy. So I'm personally staying away from it. The two most important charts, of course, are ITC and Hindustan Unilever. So I see a bit of a choppiness here also. And so I'll stay away from FMCG. So number one, if Friday's bounce back extends, look for some participation from the Bank Nifty, from the CNX Finance, consumer durables. You can expect a bit of a bounce back from pharma also because it's at supports. The bad news will be if Friday's low gets breached soon. Because these kind of decoy bars, I call them decoy bars. If these kind of decoy bars have to lead to a further fall, that fall generally comes immediately. It doesn't just go up and take some time and then come down. That also happens. That can happen. But this relevance is lost. So be careful. And before I go on to take your questions and discuss other trades for next week, I'll just quickly remind you, which is something that I tell all the time, that downward sloping markets are far more volatile than upward sloping markets. There are market emotions attached, which are of fear, which is far more impactful and powerful than greed. And so downside markets are much more choppier. Range is generally on the higher side. Volatility, choppiness will be greater. So be careful with your trades. If you find yourself not able to find good trades, back-to-back days or weeks are going bad, slow down, reduce your quantity, reduce the risk, and just sail through the bad patch or sail through the volatile patch till a nice one-way trend emerges, either on the upside or on the downside. Right? Okay, so that's the sectoral analysis from my side. Now let me quickly take a look at the questions which you have posted in the chat box, and then we'll probably look for some trades which we can add to our watch list for next week.